Good evening, everyone. It's my privilege to welcome you all to today's session on a topic that holds critical importance for our profession: emerging trends in ICAI disciplinary pronouncements, preventions, and preparedness. As a member of a profession which built on trust, ethics, and integrity, we understand that our conduct, both professional as well as personal, is under constant scrutiny. The disciplinary mechanism of ICI serve as a cornerstone in upholding these values and preserving the sanctity of our profession. In recent years, we have witnessed evolving trends in the way disciplinary cases are investigated, construed, and analyzed, often in response to growing complexities in the business practices, regulatory expectations, and stakeholder awareness. These developments call for not just reaction but proactive engagements. Today's session aims to highlight these emerging trends, analyze real life pronouncements, and more importantly, discuss how, as we professionals, can strengthen our internal systems, documentation, and ethical outlook to prevent lapses and stay prepared. We are fortunate to have with us Chairman of Ethical Standard Board C.A. Chandrasekhar Chitale, Vice Chairman of Ethical Standard Board C.A. Rohit Ruwatia, and today's speaker C.A. Ankit Maheshwari, who bring in-depth experience and insight into the disciplinary process from common pitfall to best practices. At the end of the webinar, we'll have question answer session. As the moderator, I encourage all of you to participate actively, raise questions, share your perspectives, and take back actionable learnings. With this, let's begin the session. I will first introduce Chairman of Ethical Standard Board, C.A. Chandrasekhar Chitale. C.A. Chandrasekhar Chitale. Now, he is a Chairman of Ethical Standard Boards 2526. C.A. Chandrasekhar Chitale, a distinguished chartered accountant, and is a member of Central Council of ICI for 3 times, that is 2019 to 22, 22 to 25, and recently 25 to 29. For the year 25-26, he has been appointed as the Chairman of Ethical Standard Board and Board of Internal Audit and Management Committee Accounting, and the Vice Chairman of Committee on International Taxation. He has previously served as the Chairman of the Direct Taxes Committee and the Peer Review Board 22-23. Beyond ICI, he has contributed extensively to industry bodies, having been Treasurer of MCCIA for a decade and currently serving as the Chairman of its Direct Taxes Committee and members of its Executive Committee. He was also nominated to the Cost Accounting Standards Boards of ICMA and leadership roles such as Chairman of Pune branch of ICI. An academic at heart, C.A. Chitale has lectured at various commerce colleges and management institutes and authored several articles in reputed publications like Taxman, Economic Times, Times of India, and others. His notable authored works include User's Guide on Tax Audits, VDIS, and Service Tax for Professionals. His writings earned awards such as the Best Article Prize in the PCAS Journal. Specialization in direct taxes, drafting and conveyancing, corporate counseling, C.A. Chitale has delivered numerous lectures at seminars, conferences, and public forums, including prestigious Vasanta Vyakhyanmala, reflecting his deep commitment to the professional education and public engagement. Due to some preoccupation and as he's traveling, I think he has not yet joined the web seminar. By the time he joins us, I'm introduce Vice Chairman Rohit Ruwatia. C.A. Rohit Ruwatia, who is Vice Chairman of Board of Standard. Rohit, you are the Chairman Board of Studies 25-26. He is a Central Council member of ICA for two terms, 22-25, 25-29. Has been appointed Chairman of Board of Studies Operations, Vice Chairman of Ethical Standard Board 25-26, a dynamic leader. He holds the distinction of being the youngest managing committee members of Jaipur branch, regional council member, and central council member in ICA's history. He has held key positions, including chairman of Career Counseling Committee, and Deputy Convener of RBA. Under his able leadership, ICAI achieved a Guinness World Record for the largest career counseling session. As the chairman of committee for members in practice, he introduced initiatives like Practice Ki Pathshala and the 7-day residential program for COP holders. He has contributed significantly in ICS standing and non-standing committees and serves as the chairman of SAFA SAFA SMP Committee 2024-25, working to strengthen SAPs in southern India. As a chairman of Board of Studies Operation, Dr. Ruwatia is focused on modernizing education through digital platforms, innovative learnings, and robust practical trainings. He actively engages with the students and professional community through X-Handler and Instagram, sharing his valuable insight and guidance. With this brief introduction, I request CA Rohit to present his welcome address on today's topic. Over to you, sir.
Thank you, Milind bhai, and very detailed profile you have read. Even I also need the copy of the same. So thank you very much. And the speaker of today's session and my very close friend, and I can say the mentor, Ankit Maheshwari ji, the team of Ethical Standard Board, Ashish ji, and other people who have joined, and CA Parshva Mutha ji, and all the active listeners and participants of today's webinar. So I welcome on behalf of Ethical Standard Board to each one of you present over here. And today we are going to discuss the trends in the ethical environment and the disciplinary pronouncement. So I'm very much sure that the speaker which the ethical board has selected, C. Ankit Maheshwari ji, who has a deep experience in the field of disciplinary areas, and even he has worked for disciplinary committee and for the various cases. So I'm 100% confident the way he's going to talk about the insight of the disciplinary pronouncement will be beneficial for the stakeholders. So I will not take much of the time today. We are looking forward for many things and in the ethical standard board, and we are going to come up with the revised volume 1 and 2 this year. So with this, I just conclude my words, and once again, my best wishes to all team and Ankit ji. Thank you very much.
Thank you, Rohit, for your valuable information. Now, can I have the privilege to introduce today's speaker, CA Ankit Maheshwari. Ankit Maheshwari is a chartered accountant with over 20 years of experience in strengthening financial and non-financial reporting frameworks for large listed companies. He has held pivotal roles within ICAI, including serving as the former secretary of ICAI Jaipur. He was special invitee to the Sustainability Reporting Standards Board, where he contributed to the revision of SSAE standards, integration of IFRS S1 and S2 into the BRSR framework, and advice on SEBI's consultation paper relating to BRSR core framework. He also served as a special invitee and the member of the core group of Ethical Standard Board. In addition, he leads technical review of annual reports at the ICAI Research Committee and has authored several compendiums on common errors in reporting. As a specialist in ICAI disciplinary proceedings, he has handled over 125 cases across the disciplinary committee, board of discipline, and the appellate authority, ensuring fair and just adjudication in line with ICAI regulatory standards. With this concise introduction, I request CA Ankit to take the charge of the session, and we are all looking forward to hearing from you, sir. Over to you, sir. The stage is all yours.
Thank you so much, Milind, for accepting invitation and reading fantastic profiles. But let me first take a moment to thank the chairman, Chitle Saab, but specifically the vice chairman, a younger brother, friend, in the Central Council, who has been instrumental in driving highest standards of ethics, something which I can tell and vouch on his behalf, not only for the members, not only for the council, the members, and now as a BOS chairman, for the students also. My full compliments, wishes to Rohitji for his endeavors and deepest level of thinking which he has integrated specifically for students' education and updation in today's modern era. I also want to place my thanks to Ashish Bhatnagarji, the Secretary of ESD, old friend again. A lot of things we tried doing together with Ethical Standard Board. Vishal, who has been, I have troubled him a lot while coordinating, but my apologies, Vishal, that because of the travel, maybe, the response was little weak. And the entire secretariat of our Ethical Standard Board. And lastly, I warmly welcome everyone for this, exceptional topic which Ashish ji, Vishal, and we chose together to, come on how the disciplinary proceedings and what has been the latest trends with change in laws, change in regulations. And I'll try to cover these emerging trends with some practical cases, recent cases. More importantly, how my beloved members avoid getting into such situations at first place. And by any chance, because there's so much of regulation being pushed from various regulators, by any chance, if you do face any proceedings, then how do you prepare yourself and how do you respond effectively? I shall tell you, like disciplinary committee and the benches and the board of discipline, our ethical standard board is also adjudicating matters relating to unjust removal of auditors, and there's a separate mechanism which the entire ethical standard board has kept in place uh, for specifically the unjust removal of auditors. So I'll straight away take you to my presentation. Milind bhai, I need a lot of help of yours in moderating this. Somehow I feel webinars are too much like a monologues, and we'll try to have more questions from the audience, because as Ashish ji told me, more than 1,000 participants have have joined in beginning. I am sure there would be a lot of questions and a lot of pain coming out of it. So we should be able to address that. That should be one of the more important things. And as I told you, we stand in very challenging times. There's a constant push, uh, and there's a constant push from regulators that chartered accountants are outperforms, and our roles and responsibilities and the scope of profession is expanding day by day. With not only ICAI being a regulator, even the quality control, quality review board, the NFRA has also taken some shape, and some litigation has started coming from there also. So we should try maximum to use this as a platform, and I'm very happy to discuss the problems, whatever you're facing while you are conducting this attestation function. Let me take you through this presentation very quickly. So as vice chairman himself said that we are now in a position to revise the code of ethics, and we are chartered accountants for uh, see the difference between accountants and professional accountants in today's era of chartered accountants is this charter only, is the drive which is being given by us by the code of ethics. In fact, you will be surprised to know, and in fact, Ashish ji told me this previously while we were in this group of revising the new code of ethics, that India came before anyone else in terms of having their own code of ethics. Ashish ji, correct me if I am quoting wrong. That's something which I learned from you. And
No,
I think it was year 1974 or 76. You told me that we came up with our code of ethics, and IFAC came much later than that.
yes, sir. So this is correct. We actually came with Code of Ethics in 1963.
1963.
Yes,
Correct.
yes. And IFAC came in 2001, sir.
So institute is much ahead of what people planned across the globe in terms of drafting this charter. and it was year 2009 we had our first revision, and then the new code of conduct came in 1st July 2020. Specifically, it added up on 2 3 things. One was regarding the no clar. One was regarding the dependency on a client for a particular level of fee structure, which was earlier 15%, then this went to 40% and 20% respectively for entities which are in which uh, public at large are vested. They are 20% of the gross receipt, and entities in which public is not vested, then the 40% dependency. I'm just telling you the major change. And the third one was regarding the taxation services which chartered accountants in practices were providing to address and review the self-review threads, self-interest threads. And certain things, because of the independence and because of these threads, uh, the revised charter refrained in some way to the practicing chartered accountants to not provide for the litigation or tax advisory services, including calculating taxes was allowed, but at least we have to constantly review if there were certain threats coming out of it. So this charter was revised, and now we are at a stage that we are again revising it. We had last year, ESB gave me this little job of trying and aligning it to IFAC, and predominantly we are trying that we have this Indianized version of our code of ethics still prevail, and Indian chartered accountants face a little different kind of issues than the global professional accountants, still aligning it to the global parlance. Not that we, being member of IFAC, had to do that. I'll straight away. So this session talks about the disciplinary proceedings, disciplinary pronouncements, and what are the latest trends, for which it is very important for us to understand how the disciplinary mechanism functions with our institution. So we have our disciplinary directorate. Under that disciplinary directorate, we have a board of discipline, which which you know uh, which is chaired by BOD chairman himself, who's possibly a central council member, with some government nominees on his side. This BOD's bench, generally a case moves to BOD when a chartered accountant is primarily guilty in the first schedule, or the director discipline in his prima facie opinion has given a chartered accountant or a respondent being non-guilty, and BOD sometimes takes up those cases to conclude it. And if BOD picks up that matter, then that matter is adjudicated by BOD again. If a chartered accountant is guilty under both schedules or the second schedule, that's where the bench is there. Predominantly, we have these 5 benches basis the regions we are into. Like I can tell you, the central region and the central region, and the central region will be listed in bench 2. So there are multiple benches. All benches are held at Delhi and Noida offices. BOD bench can be at different locations basis the state. They move to different location, adjudicate the cases. It is very clear that if a matter pertains to a less gravity or less of an offense, then it is taken to first schedule and the BOD adjudicates it. BOD does not have multiple benches. Instead, it moves to multiple locations to conduct its proceedings. Contrarily, if the matter is of second or both schedules, that's where benches come up, and they're divided by region from bench 1 to bench 2 to bench 5. At the hierarchy of it, the 3 institutions have their own appellate authority. When I say the 3 institutions, we have a common appellate authority, which has been the secretariat of which is with ICAI only, and the ICAI, ICSI, and ICMAI all have this common appellate authority, which is adjudicated by the Secretariat of ICAI, not adjudicated, which is taken care by. And if by any chance we are aggrieved with an order of Board of Discipline or Disciplinary Committee, the Chartered Accountant can move to appellate authority. So it is our first level of defense once an order comes against us or the respondent from the Board of Discipline or the Disciplinary Committee. So that has been the overall constitution. And the functioning of Board of Discipline and Disciplinary Committee primarily remains to be the same. If you have any queries pertaining to it, please let me know. But I think this is a very clear structure. That's something which we have always studied from our childhood times. I'll take you forward now. And as we told that, what have been the broad issues. And when Milind Bhai read my profile, Milind Bhai, out of 125 cases, I have found these 3-4 level of issues touching me. And the top two cases, I would say. One is a very basic case which pertains to NOC. And these are the top listed cases in which, these are cases which pertains to specifically first schedule, part 1, item 8, item 9, where a chartered accountant fails to obtain a proper no objection certificate from the outgoing auditor. And out of 125 cases, I can tell you more than 40 cases pertain to only this matter. And this has been, see, it is an offense, right? In terms of our act. Maybe the punishments and penalties are not as grave as, it should be, but a very routine matter, and a lot of time and energy of my beloved chartered accountants goes into this entire process of obtaining NOC and not obtaining NOC. But we'll discuss what kind of matters, how do you eventually submit an NOC or send an NOC, what if somebody does not respond to it, how much time we should allow, what if somebody objects to it and you still want to continue with the audit, then what is the remedy or what action you should take, and what is our code of conduct which tells us, right, on what grounds a outgoing auditor can prohibit you for undertaking an assignment. But again, repeating, it has been one of the most commonly found problems with our directorates. A lot of time and energy of our directorate is also consumed into it. As chartered accountants, I think we have a great safeguard from the Companies Act itself of, the 5-year block period, now for which an auditor is appointed. Two things which I learned out of this entire process. One, please don't push your client for not changing an auditor. Constitutionally, this is our sole, what is our constitutional right when you think about profession? Is it filing of tax returns? Is it litigation? Is it some ROC compliances? Is it project financing? I think when you look back to our profession, the Constitution wants to give us an absolute power for assurance. And assurance is something which is very, very independently carried activity. Thus, I observed one chartered accountants not ready to leave their client. If a client wants to change, let him change. There's no harm into it. And yes, if he is changing because of some deficiencies which you have identified, some misstatements which we have identified, I think that's where only a prohibition should be kept. Rest, let it be easy. Also, additionally, our code of ethics also says if you have an outstanding fees, including your out-of-pocket expenses, and that has not been paid, that gives us a reasonable ground to ensure or to make sure that the incoming auditor does not do an assurance over that company. Rest all things which you think that are, could be an objection, maybe will sustain at the level of the bench and the board of discipline. But as professionals, we should start being easy. When the Companies Act feel that the chartered accountants needs to be rotated in 5 years, let that rotation happen. This will only and only maintain that independence in our profession. I also learned where there has been long affiliations, the independence, because of the nature of the profession, automatically get hurts. Thus, it is advisable also that a client himself changes in 5 years, and there should not be any restraint applied by ourselves for not allowing the client to take that call, unless I told you two things are vested. So that has been cases. The other kind of cases is which has come up with from the regulatory side, be it enforcement directorates, be it CBI, RBI, SFIO. All these regulators have been becoming now complainants, and there would be multiple reasons. Every case is a different case study. When I talk about RBI, I see chartered accountants doing concurrent audits. Specifically in case of concurrent audits, I find a lot of cases coming up where suddenly, RBI or the banker takes a position and starts complaining against the chartered accountant. When you look at the logic of it, so I realized that maximum cases were pertaining to the attestation or the assurance of concurrent audits you have given on some deposit accounts or advances accounts, and those advances not being properly secured, and this happens for stock audits also. Those advances not being properly secured, inadequate documentation, unrealized checks at the bank, all these things triggers RBI to lodge a complaint. And what interesting trend I have been able to see in all these banking related or assurance where we are being an assurance partner to the bank, the banker goes away very easily. Nobody questions the banker, the branch manager who was being the custodian of the entire account. Instead, RBI, and in a lot of cases I've seen RBI has not done any inquiry from the chartered accountant, but have straight away lodged a complaint to ICAI. And that what pinches me for, a very minuscule level of fees and the quantum of effort in a concurrent audit. We should weigh this pretty well, and there has to be the right team to detect this properly. I'll also tell you a paradigm shift. Today, 3-4 years back, there were approximately 2,000 cases pending at directorate. Now we have more than approximately 3,000 cases to be pending at the directorate, and the number and the volume of cases and their adjudication has gone way up, and there is a natural trend also because the members have increased. Not that our offenses have increased, but we should give due respect to that the regulation also has changed. And if I ask you a very basic question, what was the auditor's primary and secondary responsibilities? I am taking you to most basic thing. We discuss most complex cases here, but I want to take you to the most basic thing. What was auditor's primary and secondary responsibility? You recall it. Milind bhai, conventionally the primary responsibility was that auditor presents a true and fair view over the financial statements. And the secondary responsibility, and I am telling you, whenever I take a physical session, 90% of the members sitting here have forgotten what was my primary responsibility. And the secondary responsibility was prevention and detection of material misstatement. Why I am talking about this? If you realize over last 10 years, there's a trend which has changed. And the change of the trend is my secondary responsibility has become my primary responsibility only. Nobody values what was in primary responsibility. True and fair view, no. That is minimum which you are expected to do. Minimum you are expected to comply to standard of auditing. Minimum you are expected to comply to the technical and the professional standards. But what change I see and why the cases of SFIO, CBI and ED have increased is because this new regime or this change in mindset of this government is that auditors and chartered accountants are also expected to be whistleblowers, which was my secondary responsibility. When did my secondary responsibility became my primary responsibility? I was never able to, as members, we were never able to preempt it. And that is why sometimes I feel when a case of RBI or CBI or SFIO comes, 95% of the time, I feel that actually it was an inevitable mistake. Very rarely, Milind bhai, I found that the chartered accountant was purposefully involved. It was like he was not aware. Some client came to him, said, draft my financial statements. Gentleman drafted his financial statements. Now, there was no stock. He never assured. But the bank said, oh, this gentleman was drafting the financial statement. He should have taken due care. I am not talking of assurance. If you have done assurance, then it is already a problem. And in maximum cases, I am telling you, people write in stocks while they're assuring or while even they're drafting. People write basis management representation letters. And that has been a top issue. I am telling you, if you are auditor of a branch who defaults, in which somebody does a major default and there lapses in the stock and the hypothecation, you are in a problem. Even if you are a branch auditor, and if your client defaults, then you are in a bigger problem. And unless you have been very sure that whatever has been quoted is correct, I'll discuss those cases where one of the client of the respondent was a guarantor. And once the bank starts asking the money, from the guarantor in the event of default, the guarantor says, I will not pay. When the guarantor says, I will not pay, then bank asks for his financials. In financial, the guarantee given by this client was not appearing. So forget what happened to your client. The chartered accountant's case came into ICAI scrutiny. And the worst part is, sirs, madams, to complain at our institute is the most easiest thing. All you need is a 2,500 rupees plus 18% GST and a form 1, which I will show you also. But to get it resolved is very complicated. You have to undergo a lot of process. And that is why I am reiterating that all these things, all little things has to be changed, which we are ignorantly assuring or attesting is what my experience says. And now NFRA also coming up is another kind of a problem. I'll tell you a very basic thing, and I'll tell you how complaints initiate. We have more than 1 lakh multi-purpose empanelment forms filled at because yesterday only MEF is announced, I'm telling you. And unfortunately, 10, 12 years, I recall when I used to fill this MEF, now I hardly, take any initiative. It was on a self-voluntary basis. Whatever as a member I filled, my mother institution believed on it. And I used to get category and the bank audit was allotted through the centralized system, in which the banks did not hold any rights to appoint the auditors. Gradually, I realized that this MEF form has started asking a lot of details from me. One day came, okay, attach your income firm's return. Another year came, attach the partner's return. Another year came, attach the utility files of firm, attach the utility files of partners. Look at the level of information which I have to now attach from my source file. And I feel very disheartened that my mother institution is not believing what I am furnishing. But then I realize, and only PDC can give this data, I can't quote it. But I realize in this disciplinary proceedings, there's a lot of incorrect data which goes through us in these multi-purpose empanelment forms. And my institute is reasonably generous that they are only degrading my category. Tomorrow, out of a regulation, anybody's case might be picked up who has, and I have seen those cases where chartered accountants who are not in full-time practice being members, chartered accountant in full-time practice being director simplicitors with other company. Sorry, director simplicitor is allowed being directors with other company. In a practice, I am having 3-4 sources of revenue. All this data gets collated somewhere. We need to be very, very careful. This is my humble request to all those 1,000+ audience. Please, please don't furnish any wrong information with multi-purpose empanelment forms. Whatever comes and go is fine. But we don't want that we ourselves who have been the assurers by mistake or purposefully furnishes any wrong information. Then we have this conflict of interest cases, which is item 11 of part 1 of first schedule, in which most of the cases we find that, see, we are a smart community, we are sharp community. and nobody can deny that, right? We know our ways to, invest best. If somebody asks us to put money into a business, we have those kind of acumens. That's what is inherited by virtue of education and by virtue of practice within us, which obviously will entice us to maybe do more things beyond practice. But for that, then we should not have the attachment to certificate of practice. That's what I am just trying to say. We can be detached to it and enter into entrepreneurships, and chartered accountants have done exceptionally well who have done it. Exceptionally well. I can tell you 10 companies whose founders are chartered accountants, and the, the top ones, right? We all know that. We all discuss that. The problem lies that I am holding a certificate of practice and then still into a business. And you think that, and we think that we are the smartest ones. Maybe we do it in our wives' names. Maybe we do it in our children's name. Everything is, every data now gets collected. Very difficult to do that. I was hearing a past president talking about when he was adjudicating a case that I think a chartered accountant also holded a stockbroking firm. And while the partners had some dispute between them, one partner filed complaint against that chartered accountant, and he said that he is holding a full-time practice certificate. Along with it, he's also a stockbroker. So, the bench asked him to call his wife. He was doing business in his wife's name. And he asked chartered accountant to move out of the room and did some cross questioning on stockbroking to his wife. She started crying. She started fighting with her husband. Why did you involve me into such kind of a embarrassment? And this is common. What I am discussing are most common cases. What today we will discuss, some cases are the cases which are downloaded. I have just hidden the name of the members. I don't, even though it's a public data. But what I am just trying to tell you, that whatever directorships you are holding, whatever partnerships you are holding, please hold it in the directorships as independent directors or directors simplicitas only. Please don't engage into any kind of activity. A practice is an entirely full-time. The idea is that it is a full-time job and somebody has to devote, upgrade himself to make his practice grow. The next is, which is a change in trend again. So our institute's quality is monitored by 4 very critical boards. Our institute's quality is monitored by 4 very critical boards, which is, if you can tell me, Milind bhai, do we have any questions till now?
No, sir. Till
Okay.
now, no question received.
Okay.
Till now, we
You can
don't have
put up
any.
your questions also.
We have a separate question answer session at the end of the seminar.
Okay.
We will have at
But
that
in
time, sir.
between also, if somebody wants to put up, they can.
Okay,
Okay,
sir.
sir. Okay.
So institute has these 4 amazing boards, which monitors the quality of the ICAI members and the services which we are providing. These 4 boards are QRB, which is now erstwhile I should say January 2019, this went to NFRA and no longer remains to be part of ICAI. But still we have another board called FRRB, which is the Financial Reporting and Review Board. We have PRB, which is the Peer Review Board. All this is to control quality control mechanisms of ICAI itself. And then you have this TAQRB, Tax Audit and Quality Review Board. The change which I was talking about, which happened, was that FRRB or TAQRBs or PRBs were never complainants. So what happens in the FRRB? FRRB picks up some reports. In that reports, FRRB checks whether the quality of application of accounting standard and the standard of auditing has been consistent or not. And FRRB find gaps in the report. When I say, just a minute. When I say gaps in the report, Milind bhai, can you imagine what kind of gaps have been found by FRRB? And when we discuss over this, you will be surprised to know not FRRB, but I can tell you from layman's eyes, still 20% of the companies are there which are listed on which Ind AS is applicable. Even the nomenclatures of certain items is wrong. As basic as whether as per Ind AS I should say statement of cash flow or cash flow statement. And forget big companies. You can pick the balance sheet of Reliance Industries Limited for 2022 and 23 and check what is written, because then they corrected it. And I can tell you very small things which has taken place. There was a change on 31st March 2024 in Ind AS 1, and the change pertained to material accounting policies. You will ask why ICAI's disciplinary committee bothers me. And the change was that instead of writing significant accounting policies, an entity is expected to write material accounting policies. And you are certifying all those things. So as a preparer, if he is doing wrong, naturally, SEBI or some shareholder will go to them. And this was para 117 of Ind AS 1, which got amended, and they said now the entities are expected to write material accounting policies. And they purposefully said that these accounting policies in which you define your own standard only. So if I have to write a policy for cash flow or cash equivalents, then I should not start defining what Ind AS tells me to say what is the definition of cash and cash equivalents. What is the point? Or you're writing a policy of a financial instrument, the first thing we do is we define it. So ministry said, the MC said, these are obscuring disclosures. A policy is actually a guidance to a note, correct? and the logic through which you have built up a particular node. And if there is so they came on this concept, well, there should not be any obscuring policy. I'll not drag it. What is the technical standard or none of the Indian companies adopted it. None. It's a mandate. Even the big fours, big fives, big tens who are auditing, and I'm talking on only the big companies, because ultimately you're talking about the applicability of Ind AS. And what was adopted was, instead of writing significant accounting policy, everybody started writing material accounting policy. But tell me that change in that accounting policy. Now, FRRB reviews. FRRB says, what was auditor doing? He's still writing obscuring policies. Earlier, FRRB used to give you a guidance. Today, because of this, if something is materially misstated, then your FRRB only becomes the complainant. And the first thing the council challenges is, can my institute only adjudicate and my institute only becomes a complainant? Nothing is tenable. There are written rules. Institute is still very pure and still very, holding their most best practices. If this goes to Nafra, then there's another kind of problem. And I'm not here to scare you. I am telling you what is actually happening. If there are 1,000+ people joining this, they know what kind of pain everybody is going through. So FRRB becomes my complainant. Little things. Depreciation. What are the components of depreciation? How the calculations is made? People who are still on tally, your clients who are still on tally, how inventory is to be valued, cost or NRV, whichever is lower. You write this, but did you actually NRV? That's what FRRB asks you. And you can't answer it there, sir, cost was always lower than NRV. You have to demonstrate it. For a raw material inventory in tally, we are still using the average cost methods because tally still computes that. But FRRB questions, should it be weighted average cost? Little things, but you see a lot of repercussion. And what has happened at the level of FRRB, unfortunately, same things might happen at the level of PRB. You got yourself peer reviewed, or you were a peer reviewer. Now it has been questioned if there is some issue into the compliance of technical and professional standard. The chartered accountant of the client is naturally questioned by NFRA, naturally questioned by FRRB. But the peer reviewer is also questioned. So all these things, lot of cases are pending. I can tell you one smallest example. Listed companies auditor through SEBI's regulation were expected to be peer reviewed. Yes or no? Not today. Today, though, we have this glide path. And every year, my beloved chartered accountant firms are getting reduced in the structure to avoid that. Sir, madam, don't avoid peer review. There is no way we can avoid it. And why should we avoid it? If something is not done, let's correct it and do it. But I can tell you that there were so many instances in which chartered accountant has already audited a listed company getting a peer review. How will a board issue a peer review certificate if that happens? So all these boards are also regulating, and any of my board can be a complainant department. I know a top faculty in India. He discussed some paper on Twitter or something, which is obviously, certain section of the paper I don't know, is not allowed. The BOS, the examination committee becomes the complainant in that cases. So that bleed does not work, that my only committees are the complainant. Institute has this right to take this information and self-regulate. And friends, this is the last opportunity for all of us. Either we fall under this ambit of self-regulation, or you will see some external bodies regulating us. So that's why I am very clear. Your compliance to professional standard, technical standard, ethical standard has to be topmost. And if that is controlled, get yourself peer reviewed. Take all the suggestions which needs to be implemented. Implement SQC, implement AQMM. That's most essential to grow your practice. So these are some broad issues which I felt I should discuss with you. We'll move ahead. Very quickly, in a minute or two, I'll take time as to how the entire disciplinary proceedings function. So we have a Form 1, which is now a E-Form 1, hosted at the website disc.ici.in. The form has to be, you can submit it e-form also, and you can submit it physically also. Has to be submitted in triplicate. That's how a Form 1 looks like. So you have to tell the name of the complainant if you're complaining. This is a very important form if you are a respondent. Name of the member firm against whom complaint is being made. So that is point number 2, is the respondent. Address of the complainant. Last available professional address of the respondent. Now the allegations, and you can attach a note of these allegations. But most importantly, with each allegation, you are expected to tell the item under which you expect the member to be guilty. If it is a case of gross negligence, you will talk about second schedule, item 7, part 1, second schedule. If you will talk about the predecessor auditor, you will talk about item 8, part 1, first schedule. So you have to actually name. And of course, the other misconduct is a very important element out of it. All the evidences and the verification and the signature. That's all. Simple form, 2500 plus 18% GST. Or I don't know whether now this GST will change or not. So once this Form 1 reaches to ICAI, our disciplinary directorate takes this up. And ICAI notifies to the respondent, and the respondent has to reply primarily within 21 days of this Form 1 complaint. Whatever has been the allegation quoted in Form 1, the respondent has to serially respond to it. And then the complainant is again given rejoinders to reply to your written statement. basis that now this directorate is headed by Director Discipline of ICAI. And this directorate or the secretariat, the Director Discipline happens to be the secretary of the BOD also. Reviews these documents, statements, forms, and issues a prima facie opinion that primarily he thinks whether the member is guilty or not guilty and under what clauses he is guilty, under what items. As I told you previously, if the case is referred, pertains to first schedule, then the matter lies with BOD, and if it is both schedules, then it is bench. If he finds it is not guilty, BOD will review it. Sorry, the content written might be confusing. BOD will review it and then it gets closed. BOD can still ask him to make further investigations. So naturally, the lesser offenses are with BOD, the serious ones with committee. Now, once you receive this prima facie opinion, if you are guilty, if a member is guilty, then you have to respond to the prima facie opinion of the Director Discipline. And an opportunity of being heard, not only opportunity of being heard, multiple hearings happens. The BOD and the benches have the civil court powers. They can summon anyone, cross-examine. Everything is like a court. And I have seen in our proceedings, even the MDs of the banks can be summoned for particular matter. So the cross-examination takes place, 2 hearings, 3 hearings, 4 hearings, some time is lapsed. And the maximum punishments what BOD can award is temporary suspension, reprimand, maximum suspension up to 3 months or a fine of 1 lakh. DC might have a longer period, permanent removal also. And the final orders are passed. So this has been a typical process. Last thing. So the bench or the board of discipline passes an order first that whether you are guilty or not. For the fixation of punishment, they give you another opportunity of being heard. So once the bench or BOD decides, okay, the member is guilty in following items, for fixation of punishment, they give you another opportunity, and there, they hear you again that if a punishment can be of a lesser or not. Certain protocols are there. Now we have e-hearings also. We have all modalities. You have to take up a oath. Typically, a oath is read, which appears to be on your screen. And the charges are read against you at the bench, and you have to say whether you plead guilty or not guilty. So that is the process. If somebody, I don't know, I wish that nobody wants to hear that. But that is a typical process. Now, I told you about, recurring reasons for disciplinary proceedings. NOC we discussed. Ethical breaches, which is generally the cases of other misconduct. Plus, at times, you see other misconduct and professional misconduct being clubbed together. A lot of cases has also been coming on advertising or soliciting. And sometimes again, inadvertently, I was going through a case, of media house published some, recognition for a chartered accountant. Even that case was considered as to be an advertising activity. So you have to be very, very careful because today we have a lot of local media channels, people approach you for interviews, a lot of city channels coming up. Nothing should be in the name of soliciting clients. Then you have, when I say ethical, then you have some cases in which a lower fees is accepted to poach a client. Now we have some cases, very important thing which I want to put up on this webinar. We have a tender monitoring directorate. So one thing is naturally, there has to be no undercutting, make sure. Please, please, please don't accept an assignment at a lesser fees than your previous auditor. One, two, for government tenders. Now we have a tender monitoring directorate. I am sure you are aware about it. If not, then visit the website of TMD and look into tender monitoring directorate, because now if you quote one, you can't participate in a tender in which minimum price is not given. I hope you're aware of it. You can't. And you can't quote less than minimum price. And while you participate in a tender, you have to maintain a cost sheet which is specified by Tender Monitoring Directorate. Your cost should always justify the price you are quoting at tender. And in this, no complainant is required. I have seen cases of some, BSNL, North India, some small internal audit, estimated price 45,000. Fellow chartered accountant quoted 43,000. Tender monitoring directorate have issued him a show cause notice. So as I told you, these regulations have become stringent. Avoid undercutting and specifically avoid participating in the tenders which does not quotes minimum price, not estimate it. ICAI wants to bind these government authorities because we have seen in past some fellow chartered accountant took a government tender at ₹1. And we have to discuss these problems. We can't avoid discussing them. So it is clear. There was a case, I think of 2018. I am talking about ethical breaches, where a chartered accountant was distributing the visiting cards, and the bottom of it was written loan guaranteed. Similarly, using a logo of an international affiliation, we know it's a very big case going on with a lot of firms at the level of ICAI. Read the website rules of ICAI before you formulate a website. Otherwise, all this is clause 6 of part 1 of a schedule. Everything, all your breaches comes under the solicitation. Now, some issues which pertains to professional negligence. Like I was telling you in the beginning, if you are unable to verify the stock records, lot of cases we have found people have signed balance sheets, some small balance sheets. People come to your office just before the due dates. We are talking of that same season only. In the same season, gets it signed. See, if you have to practice excellent profession, I'll tell you my experience. You should always have risk to reward in your mind. And most of the cases, I see for a very small reward, my fellow brother or sister entered into a engagement which already had huge level of risk. Always before signing up an engagement, please assess your audit risk. Document them. Train your team on those risks. Some cases, I'll tell you a live case. For tax audit, we file this Form 10B. I'm not a very great tax practitioner, neither I practice it. But I heard that we file 10B. And if you have taken a Section 12 exemption, that's when you file 10B. Milind bhai, correct me, where income tax is very weak. But I know the case because I was pleading that case. Now, some article of that company, instead of 10B, filled 10BB. Now, 10BB is something which I think is exempt under Section 56. That's what I recall. I might go wrong, but I'm telling you, instead of 10B, 10BB has been filled. It is uploaded. Now, when the assessment of client came, I think unless that 10B audit report will not be verified, he will not be able to claim what we call it as application of income. And whatever his auditor certify as a part of application is something what he can claim. Correct? So 10B is not filed. Instead 10BB is filed. Now client comes to his chartered accountant. He have filed, I have received this notice. There's an income tax demand. I am to exempt it. I should not pay taxes. Then he gets it checked. Oh, instead of 10B, it is 10BB, which is filed by the article clerk. Audit assistant. And audit assistant, or why this negligence? But eventually, the income tax officer said, ask the CA to write in writing that he has done a mistake. So I will be able to rectify this manually. My brother, in an honest intention to save his client, wrote it. 3 months later, CBDT filed a complaint that he is himself acknowledging that he's been negligent of filing 10BB instead of 10B. What kind of case I should plead? Who will help? They accepted it. So, such things also comes while, which comes under the ambit of professional negligence and lack of due diligence. Then you have naturally poor documentation, record keeping, working papers, manuals. I am telling you, the times have come when your SQCs will be evaluated. Within by while people were getting peer reviewed, I found lot of firms initially which scored themselves 600 out of 600. Now, because it's a self-declaration again. So please, I think we have to be fair to us and fair to this profession is what I am trying to conclude. And one more thing. This client of yours, for which you have had sleepless nights to make sure that his bottom line is good, make sure he gets best of the advice, is complainant in maximum cases. Other than NOC, if I remove NOC cases, 85% of the cases the complainant is client. 85. And what kind of cases? And nobody can save him. He says he was preparing my books of accounts, he was filing my income tax return, and he was auditing also. And I can show you cases where he has billed bookkeeping with stat audit fees. So these are all conflict of interest scenarios also. And we have to be very careful. See, we have to have that kind of relationship with client. That's why I told in beginning. If he says that he's not happy, let him go here. Because that's where he will first time become your complainant. And instead of putting your energies, if we put our energies in growing our five more clients and making them financially stable, financially independent, I think that would be much better. That's why I told you this thumb rule. I'll feel bad if tomorrow you come on my face and say, no, we don't want to, no longer want to engage with you. You say, I am more interested in not engaging with you. Please go. Because my experience says that's a ego or self-respect or self-esteem. That's where the complaint begins. We have to reduce such level of complaints and we have to let it go, and only two things to be taken care. Then you have violation of SA 230 cases, audit documentation, unsupported audit conclusions. Another problem, when you give a qualified report, you are sure to be rotated, removed. And that's where your audit, because then you have to fight a battle. That's where your audit documentation is very important. Forget audit documentation, that is most important. Your engagements, how they happened. Please don't write such kind of mails as discussed. We are happy, we are pleased to be. I received a bank audit mail through a client. He said we are glad to be associated with Bank of Baroda. As professionals, does it suits us? Banks are glad to have us on board. We have been value adding in always refraining their NPS. Why we are glad? Another kind of case I am telling you, because we discussed MEF. At least 4-5 bankers, because of these intimidation threats, where some staff of chartered accountants maybe accepts hospitality or something like that from client, we can't accept it. The bank audits, specifically in case of bank audits, because now the bills are processed through these regional offices or what. You can't receive a query from a bank, please make sure that your bill which you have claimed is more than your entitlement. It is itself a disrepute to a profession. And we have to make those little changes happen. Conflict of interest, a lot of cases. The CEOs, CFOs are relative. No KMP can be a relative, no director can be a relative. I think we are pretty clear. You can't be a director. You can't provide loans to your client. You can't take money from your client. Please, no financial transaction. In fact, the GST component or the TDS or income tax component, can you take it in your firm's account? Yes or no? No, you can't. For collection of tax money, you have to have a separate escrow account. And in all these cases, when these cases comes where your bookkeeper also and you're taking tax money in his account also, then what do we answer to the Board of Discipline? That why this gentleman was taking money. As I told you, a lot of thrust. Next point is on failure in fraud detection and reporting responsibilities. A lot of thrust is being given in last 10-15 years that auditors have fraud or prevent them to happen. I can tell you a case of SFIO, large firm again, top firm, listed company, NBFC. The signing partner was the whistleblower. Hear me out. He was the whistleblower. He reported it to RBI. He reported it to Ministry of Corporate Affairs. And he was guilty and the name was permanently removed. Because as a whistleblower, the SFIO asked him this question, and NAFRA asked him this question. Why did you blow this whistle after a certain period of time? Think of it. So don't be very happy if you have detected a fraud. If you have been in a continuous engagement, then the question to us comes why you have not been able to detect it previously. And I don't know how many people are doing these large audits through using tech and audit tools. You can't do it without them now. Please have your tech integration done, audit softwares installed, for which you have to ask that price from your client. Otherwise you'll not be able to do it and you'll end up in trouble. And that's why I said estimate this risk and reward well. Accounting standard, auditing standard, I told you, a lot of problems, even for the larger companies. When I start reading the notes, because as Milind Bhai was reading my profile, I am the head technical reviewer and the jury member to this board. And when I review these annual reports and when I look at that, they are big auditors and their accounts are not in the compliance to the framework. And I can tell you, pick up any company's intangible asset and check applicability of Ind AS 38. Check whether he has separately disclosed intangible as intangibly generated, acquired, or under a business combination. Check whether a finite and infinite life is defined into it. Check whether the useful life of the critical assets is defined in this note. If you find one, come to me. So it's not the problem of small auditors only. Sometimes we think we are too small. We are small because I'm sure 90% people are SMPs here like me. The largest of the largest are not doing, there lies an opportunity. If somebody is really doing it well, upskilling, there's a serious opportunity. And I'm telling you, when you look at the larger firms composition, you'll see that now they're no longer interested with assurance engagements. So this assurance, those who will upskill themselves will only prevail in this scenario. The way I told India is 38, if that's the way you look at it, nothing will happen. Forget my lecture. You can sign off right away. So some cases comes on misrepresentation of facts or certifications. And another thing, with accounting standard, I missed a very important point. If a case is initiated by the complainant on accounting standard, by a client, and if it is a matter of accounting standard only, then the accounting standard invoked is related party transaction. Two partners, two directors, one hiding from another, another hiding from one. Unfortunately, you are chartered accountant. They are into dispute. And if they have to arm twist you, they will say, see the disclosure, this does not comply to the related party transaction. For their benefit at NCLTs and court. So RPT is something, please don't miss it. Then you have, as I told you, facts and certificates. Every state government, I'll tell you one case, every state government offers subsidies nowadays, even the central governments also. And a lot of chartered accountants are advisors to it, to the client, how they avail the benefit of the state government. I see it in Rajasthan. Now this authority of Rajasthan asks us lot of certifications, including expansions. You certify whether there's a 200 crore expansion which has taken place in the company. And you think, okay, it is just about a broad understanding and doing it. Sir, if you are assuring, you're generating a yielding, none of the line item you can miss and you can sign without a documentation. Now decide the fees of that assurance. False net worth certificate, wrong turnover certificates, inflated capital confirmation, all this is a big, big problem. The next is other misconduct, when I will take the charter very quickly because we are running short of time, but I hope my message is clear. I never wanted you to prepare for cases too much. I know 99% here would not be dealing with it. But I'm telling you what are the reasons which could be a probable problem for all of us. So as I told you, any public statements through advertisement, a negative comment on profession, offering assured returns kind of a thing, using designation for personal promotions, all these things undermine the reputation of the profession. Some ED, CBI cases where we see illegal, unethical activities, money laundering, still demonetization cases are there, EDs there. They have become complainants, shell company transactions, GST fake invoices, all these 0.001% of our community could create problem for 99.99% who have been acting very honestly for this profession day out. So I don't want to take you through these schedules, but I am pretty sure that, we have discussed a lot, but I feel on this page, which is appearing on your screen, clause 5, clause 6, securing professional business by non-permitted means, solicitation of professional work, and advertisement of professional and other achievements. This is one item which is a problem. And the next, obviously, I told you item 8, non-communication with the previous auditor. I don't want to be repetitive now on it. But with item 8, if the matter is of company, then item 9 is also, with item 8 comes free is what item 9. And item 9 is about the incoming auditor to check the compliance of section 139 and section 140 of the Companies Act. Block the third AGM, you can see the auditor. Yes or no? Simple question. If appointment is a company for 5 months, in a third GM, some client approaches you at GM, can you take this appointment?
Sir, sorry to interrupt. I think you're having some network issues because your voice is getting disturbed.
Oh, now did it got better?
Last few seconds only, not more than that.
Is it fine now?
Yes,
It
perfect.
is
I am
fine now. Yes,
saying,
yes, it is now fine.
I am at a very remote location called Baswada. So there's a real network challenge. So I'll come up again. I had this very basic question. An auditor is appointed for a tenure of a block of 5 years. Yes or no? In third year, this client approaches you at the AGM that, sir, at AGM we will retire the auditor and we will reappoint you. Can you be appointed? No. Without a permission of central government, you can't be appointed at the third year AGM with it require a central government permission. Yes or no? So no value of fees can compensate it. Only thing you have to check is whether you have a NOC, and if the auditor has resigned himself, then it is fine. But if the removal has to be taken in AGM, it can't be done in AGM through an ordinary resolution. You require a special resolution and you require the permission of central government over it. Agreed or disagreed? So no fees can be of any kind of help. No fees. So make sure that this is what section 140 tells you. Also, I have seen some government companies adjudicated by CAG. These all matters comes to ESB also. The CAG tells you that you are appointed, or the bank tells you are appointed. Please check whether there is a, before even accepting the engagement to them, you have to take NOC, yes or no. We do vice versa. Second, if you want to do this, ESB has specified you can give a conditional acceptance. How many of us give a conditional acceptance in AG audits or bank audits is my question. Please give a conditional acceptance saying that this is subject to NOC from the predecessor auditor. Accept it because they give you 1 day, 2 day time. I know this. I'm just like you only. I face this problem day in, day out. But always a conditional NOC has to come. And always ensure if it is a private public limited company, item 9 is also complied. His resignation is ADT 1, ADT 3, everything, the date, please maintain an Excel tracker over it. When was the removal? When was the ADT 3 form filed? When did you put NOC? When did you accepted the engagement? When was your ADT 1 filed? Everything has to come in proper place. And I see some funny responses. People say filing ADT 1 and ADT 3 is not my responsibility. I know it is not your responsibility. The institute also knows it. But the clause to which institute is asking is this clause 9. That whether you have checked the companies at compliance or not, as an incoming auditor, please tell us. Success-based fees, you can charge, but not for assurance. Not for assurance engagements, right? Engaging business occupation other than CA, we had a lengthy discussion. In second schedule of, in first schedule part second, I don't see too much of cases coming up as of now. In part 3, first schedule, yes. I think there, if you are not cooperating with director disciplines proceeding, you have your item to invoke. Or any requirements of council, committees, DD, Board of Discipline, Disciplinary Committee, QRB, Appellate Authority, please cooperate with them. Otherwise, you will end up in further trouble of invoking part 3 of a schedule. Tender Monitoring Directorate, when inquires, invokes item 3. Of part 3 of a schedule. See, if a complaint is filed against you, worst case scenario, try to keep it under first schedule only. Don't let the complainant invoke the second schedule. First schedule, we know what could be the maximum punishments, right? All this, I think we have discussed fairly. I'll come on the second schedule. Confidentiality is important. Wrong reports, wrong verifications, estimated numbers, projected numbers. We have a standard of assurance engagement in case you are certifying any projected numbers. Audit of concern, in which you have substantial interest, material facts, misstatement. Maximum cases, item 7, gross negligence. Concurrent audit problem, gross negligence. Branch audit problem, gross negligence. I have seen cases for a gentleman I met in my life. He gave opinion to some real estate regulatory authority. For a gentleman. That opinion went against some, some occupant filed a complaint. That occupant of that filed a complaint that because of his opinion, even though, all these things will come up, but whatever you are giving on your letterhead, even if it is a non-assurance thing, what I'm trying to say, you have to be very, very cautious. We have discussed item 10. We will have a separate account for keeping clients' money. The maximum fines and penalties which an institute can invoke is up to rupees 5 lakhs. A reprimand is a formal sense of giving serious warning. We see suspensions from 15 days to 3 months to permanent suspensions. Removal of register is the permanent one, right? All these things could be problem. Now, what is new which is coming up? I already discussed it. One is a mandatory CP and peer review. Now we have a block of compliance of CPRs. If you have violated to this and violated to the peer review requirements, these are those growing area of scrutinies. So be very careful of your compliance to CP. Be very careful to your compliance to the peer review mandate. And this invokes second schedule. If there is a mishandling or you're suppressing whistleblower, that's why these cases of CBI ED are the growing ones. Another thing, as I told you in the beginning, the revised code of conduct got changed. Sorry, added few things. One was section 315, which talks about non-compliance of other laws and regulations. This is applicable for members both in practice and service. So, as an assurance provider, you are expected to report for the entity if there is any non-compliance of any other law, be it money laundering, which has come to your notice, be it bribery, anti-bribery laws. So, if you have, including the environmental protection laws, so if you know your client is operating in an area in which pollution control board has not given the right consents and you are aware of it, you have to report it. And these are those new areas of scrutiny where I think you will require more tech support and softwares. A completely API enabled software which can track non-compliances is what is expected to be installed at larger clients. These are these emerging areas. I think we have discussed broadly all these things. I had some case studies which I was telling you as a part of while we were discussing the cases. But certain things which I wanted to tell you of NOC, right? You have to send NOC through registered AD. That's what it is mentioned. Milind bhai, I've seen cases when NOC case comes, blanketly it does not create any major penalty on us.
Okay, sir.
Blanketly. But out of the fear, my member sometimes fudges documents like a fake courier receipt. Or he says, I have posted it in writing, but I don't have an ID. What this has done is, I have seen one case in which other misconduct was invoked. That's where the process should be large. So to defend a particular charge, you should not play with corporate. Whatever is true, because item 9, the penalty could be reprimand, financial one case, but if it is other misconduct in second schedule, wrong furnishing of information, this can extend deeper. Similarly, just a- similarly, sorry. So one is applicable for not only for companies audits, but the tax audits, including the internal audits. Wherever you are generating a UDIN, make sure that if somebody predecessorily is another thing, if you receive an objection, then how do you deal and respond to it is also very important. Sometimes the predecessor is not giving, as I told you, then we have to actually look into this, whether this pertains to, if he has highlighted specifically that there is a misstatement or client has been misleading, providing misleading information, or there's an outstanding fees, don't touch it. Don't touch it. In fact, 99% cases, if both of us sit together, I think we'll be able to reach out to some consensus. So, NOCs are, I've discussed most important things for NOCs. Have certain cases which very quickly I'll run you through.
Sorry to interrupt you, sir.
Huh.
Within 5 minutes, can we start question answer session?
We
As
can
we are
start
running
right
short of
away.
time, sir.
Already discussed major of my points.
Okay, sir.
Do we have any questions as of now?
Yes, sir. We have received number of questions that is already shared with Milind, sir.
Okay.
Uh,
Help in those questions and help in answering them also. Linda, you are asking questions. I'm waiting for you, na?
Okay, sir. Okay. I'll. While doing audit, if a non-compliance relating to tax is observed, then is the auditor required to address the same?
As a tax auditor, though, Milind bhai, we have to address it, right? There's no
There is
doubt
no
the
question
form
about it,
itself.
sir. Yes.
In fact, when I'm saying no clause is applicable, tax
Huh.
is the most immediate law. Even the environmental law has to be reported.
Right, sir. Right.
There's no ambiguity, sir. If there's a non-compliance with the tax laws and you have found it, have to be taken to tax audit report. If you're a stat auditor, then also needs to be mentioned there if it is material.
Yes, sir. We have to report it. Yes. Second is question is very funny one, sir. While watching a cricket match, I shout slogan against a player. Whether am I hit by professional ethics?
See, as I'll tell you one incident, Milind bhai, when this charter was framed, I don't know whether it is there to, have some lighter moments, but I'll tell you something very important. So when this charter was made, we adopted this charter from Institute of Chartered of England and Wales, and that's how our act came. So there is some parlance, you see what is happening. So that charter, the erstwhile charter, the British Crown Charter, said a CA was traveling through train. आपको याद होगा, I don't know whether you recall or not. This was taught while we were young kids. Without a train ticket, he was caught While he was caught, he was fined. Whether this constitutes to other misconduct, that charter itself gave an answer. Yes, this constitutes another misconduct. If you say chartered accountancy is not only about rules, regulations, or the charter which this institute gives, I'll tell you something beyond this and take it very seriously. It is a way of living. Nothing else. Forget my charter. I am saying it is a way of living. All
Right.
my conducts has to be what an appropriate society person's conduct should be. Slogan against a player standing on a boundary and you shouting him something wrong, he could be the probable complainant, I am telling you. And not in institutes court, even in the civil court.
Yes.
So, so make sure that we are a balanced community. That's what is expected. It will constitute as another misconduct.
Okay. I'll The next question is relative of an auditor allowed to company audit is being done by the auditor?
Relative of the auditor can do accounting of the company if the relatives definition falls under the Companies Act. See, there is a self-review thread. You can't do it primarily in a distant relative. Certainly, as a friend, Milind is doing accounting, I am doing auditing. Allowed. The charter does not restrict me, but make sure that the definition is not falling under the category of Companies Act. Otherwise, there's a self-review threat arising out of it.
Right. What is meant by material to financial statement as used with reference to the taxation service in Code of Ethics?
This is a followed up question, I think, or this is a previously asked question.
Okay, sir. The volume 1 of Code of Ethics uses the word material at the various places. For example, where the amounts are material, there is some restriction on representation before taxation authorities or audit clients. Materiality is not defined. How be it taken?
So, see, I'll tell you some. If it is a listed company case, then the materiality comes from LODR. If it is a unlisted company case, right, we have now defined this materiality to the gross blocks, to the net worth, to turnovers, and you have to calculate it, right? If an event of something, and I am sure we know this, right? Can say if a company has for a Reliance, a demand of 10 crores, 20 crores, 50 crores is nothing, right? It does not impact the going concerns or the way the companies operate. But for probably us, for me, it's end of the story. So the materiality has to be looked into. Obviously, if it is SEBI, then SEBI LODR clearly identifies what events are material events. For them, even a change in CFO is a material event and has to be reported in 30 minutes, right? For uh, for such cases of tax audits and tax demands, yes, you are right. They specify the materiality, but that is more on a discretionary side of it, not on the audit side of it.
Okay. The next question is, will the members be liable for professional misconduct or any action taken otherwise than in professional capacity, for example, while engaging in the other business occupation?
Other misconduct or professional misconduct, other business
Other
occupation, item 11.
misconducts.
Item 11. But now, as a director, he forged with the other directors. Then the other misconduct is invoked.
Right.
That happens. That happens very commonly. That I am a director, I am a practitioner. Now, as a director and practitioner, item 11 is already invoked. Now, I had a dispute with other directors. Then the misconduct also comes into picture.
Okay, sir. Mr. BPR is statutory auditor of Messrs. SUP Private Limited Company. Regarding an attestation statement issue, Mr. BPR is taking time in signing for want of information. In the meanwhile, another CA, Mr. Y, was contacted and he attested statements. Is it a breach of ethics? How to initiate action?
100% breach of ethics. There is a valid
Absolutely.
appointment you are holding, and the first thing is that uh, this incoming auditor, if he has not seeked any NOC, naturally you have to look into it. There is an ongoing engagement. It is not only about item 8 and item 9. Again,
Correct.
I am saying make sure that the second schedule is also invoked. The action initiation process, I told you, Form 1 has to be taken place. And with a valid appointment, if another CA comes, there could be a case that there's a delay in signing of audit report, but make sure that, see, this is a legitimate case, right? If you are taking that time, how much reminders were given to clients, institute also work on the principle of natural justice. You just can't hold your client. That's it. You should not be able to, otherwise this becomes more, uh, squeezing him up, right? That should not be the case. It should not be arm twist for the client, but nobody can take this engagement, and the CA will be held guilty surely if he has done this.
So the last question is, while representing before authorities, submission made on behalf of clients are not accepted and adjudicated as false. What will be the responsibility of the CA and what precautions he should take care to safeguard himself?
So the worst case I told you, for a real estate regulatory authority, somebody gave an opinion or a representation, and that was just an opinion or a representation, or you are submitting on behalf of client. Worst case is item 7, gross negligence. As a safeguard, see, thumb rule. You should not leave your shoes and enter in the shoes of your client. Thumb rule. And for which, that means the interest of the client and your interest cannot get attached. If it is not attached, you can furnish. If a client has first it, you have not assured it, no problems, you can do it. There are cases I have seen that the client first the documentation in the CA. My job is to represent him, right? But knowingly that he is representing some false information, that's where you left your shoes and entered into the shoes of client. That's where these authorities can take you over a task.
Okay, sir.
That's it, Milan.
Sorry?
That's it.
That's it, sir. Thank you. Yeah.
Thank you so much.
Yeah.
Milan, I'll just put my thanks in a minute and then I'll hear you out.
Yeah.
But
Just
first of
give me
all,
a
thanks
chance to present my vote of thanks before you conclude, sir.
Right.
Yeah. On behalf of the organizing team and participant, I extend our sincere thanks to CA Ankit Maheshwari for his insightful presentation on today's topic. Your session was an eye-opener, thought-provoking, and it has definitely added great value to our understanding of evolving regulatory framework in the profession. We truly appreciate your time and expertise and look forward to more enriching sessions in the future. Thank you very much, sir.
Thank you so much, Milan. You have been a wonderful co-partner in, helping this entire 1 hour, 40 minutes. And thank you, ASB. Thank you, the chair and the vice chair. Last tip, I think we have opened up a lot of things. The idea was always that, we have to remain very cautious with these increasing regulations. And how do we gear up ourselves? What kind of issues are trending? And we only, the calculation of risk to reward, which I told, uh, always do that while you are providing your services. Thank you for patiently listening and taking it up, everything in a very positive spirit only, right? Thank you.
Thank you. Thank you, sir. Thank you. Thank you so
So
much.
much, Ankit sir. Thank you so much, Milind sir,
Thank
for
you.
this wonderful session. Okay, sir.
Thank you.
The technical team, please end.